From Singapore, Rogers Holding Chairman Jim Rogers, great to have you on this breaking news morning, Jim.
Oh, I'm delighted to be here, Sandra. Nice to see you.
All right, so what do you make of this? The Greek rejecting these bailout terms?
Well, yes, it's a very emotional thing. You know, politicians stir people up, and they vote their emotions instead of their brains. Now Greece is in the situation of they either leave, which will be a disaster for them for a while, or they stay, which will be a disaster. The problem, Sandra, is that nobody seems to accept the fact that Greece can never pay these debts, and that the only real solution is for Greece to go bankrupt and start over. Unfortunately, it doesn't look like that's going to happen, and we're going to try to carry this down for a few more months or a few more years.
All right, so you say it's going to be a disaster either way. There's no win here. There's got to be a better option of the two. If you're saying that Greece exits the Eurozone, what does that look like? You're just saying it's going to be a disaster, but what exactly does that mean for the Greek people? What does that mean for exiting the currency and going into another currency? I mean, it's hard to wrap your mind around what this would really look like.
Well, no, I didn't say leave the euro. I said what they should do is declare bankruptcy, stay in the euro, and start over. The euro is good for them and good for the world. So they should stay, but just go through their bankruptcy. You know, Sandra, we've had states go bankrupt, cities go bankrupt, counties go bankrupt. They didn't leave the U.S. They didn't leave the U.S. dollar. You know, it can be worked out. It's been happening many times in history. But it would be terribly difficult for a while because a lot of people would take big losses and you would have turmoil for a while, but then you could start over. I mean, many countries have been through this, Sandra. You have a period of pain for a year or two, and then all of a sudden, things start getting better when the worst is behind you.
All right,
it's not the first time a country's happened.
You know, the concern is that this could happen some other places as well. So, Jim, maybe you could do this for us because, you know, the average U.S. investor continues to watch all of this news coming out of Greece. It's in mainstream media now. I mean, everybody's looking at the situation there. There is a question about whether or not the U.S. would face a tough road like this down the ways if we continued on the road that we're on today. It's hard to imagine what it would be like in the United States if we went and we were limited on our withdrawals at our ATMs and banks started to say they were running out of cash. That's the situation that's happening in Greece right now. How do you apply what we're seeing there to the average investor and what this means to them?
Well, Sandra, that is going to happen in the U.S., not anytime soon, though. But before all of these crises are over, it's going to happen in many places. France, Italy, Spain, many places, including the U.S. But the U.S. is going to be several years away. It's not going to happen soon. It just means more economic turmoil and losses. Banks are going to have to take some more losses. Investors are.
All right. So how do you play this? You've always got a trade. You've always got an angle on how to win on a situation like this. What do you do as far as the trade?
Well, what I may be doing it now, I'm not doing anything at the moment. It depends on what Greece does. If Greece should leave the euro, I would buy the euro that day, that minute. If I were close to my Fox TV, I would buy the euro. If they don't, if they prolong this thing and keep kicking it down the road, I'll probably buy China. Chinese shares have dropped a lot here in the last 3 or 4 weeks. It just depends on who does what to whom.
Speaking of which, we've been chatting about the Shanghai stock market. It has entered into bear market territory, off more than 20% from its recent highs. Jim, a lot of volatility there. A lot of people watching those markets. How do you play that one?
Well, again, I probably, if I weren't talking to you right now, I'd probably be picking out some things to buy in China. I suspect we're overdue for a rebound, if nothing else, in China. China's had an unbelievable drop. And if you ask me, when something like this happens, normally, if you're foolish enough or brave enough, you step in and buy, which is what I will probably be doing.
All right, so you would buy the Shanghai where it's at today, and talking about the currency market as we leave things off with you, Jim Rogers, you're predicting what for the U.S. dollar?
Well, I own the U.S. dollar. One reason I do, Sandra, is because there's so much more turmoil coming in the world in the next year or two. And when there's turmoil, people seek a safe haven. They think the U.S. dollar is a safe haven. It's not. It's not, I tell you. But since everybody believes it is, and there's more turmoil coming, it's my largest currency position on the long side, because we're going to have more problems and more people are going to flee. They're not going to flee to the euro or the Japanese yen. They're going to flee to the U.S. dollar, including me.
Jim, anywhere you like right now? What do you like globally as far as markets?
Well, I said China. If there were any market that I was probably going to be buying right now, it would probably be China. Maybe some Japan. Russia, I would be buying Russia. But mainly China at the moment.
All right. Jim Rogers, thank you for joining us on this breaking news morning.